The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Monday edition, Monday, August. I got used to saying August now, August the 6th. Oh, man, time flies. And I just had a wonderful hour with Steve Rhodes, just a great host, great technician, and pleasure to go through those charts as I was able to do with him and to listen to his comments and to go through my perspective. And we're going to cover some of that in this show, but let's just go straight to the numbers. And the numbers are such that there is a Dow plus 80 right now at 13,176. It's going into, I'm going to draw this so that you can see it if you're looking at Tiger TV. So you and I are on the same track there, the inside track. We're coming up to resistance, and that resistance should be round about from here to about 13,239. Dow's at 13,176. That's the area where I'm suspecting that we're going to see some hesitation, unless it's just a power move right through it. And the power move says even if we were to have a power move, the next area of resistance based on the history of this particular channel would be somewhere in the, depends on what day, but somewhere in the 13,280 to 13,350 area. However, what is really important about this, I'll go through in a short while, is the volatility index, the VIX. Remember, I've been talking about this for a long time. For me, it's the simplest thing. Buying pressure, selling pressure based on the VIX. What are the numbers? Well, the numbers are numbers that I've garnered and modified over the years. And every period there's a certain set of numbers that I look at that is not prescribed or proscribed. They just come about because the charts say this is the level that you've got to be looking at. And for me, it's been 20, above 20 on the volatility index. Says selling is going to be rife. Be careful. If it holds, that's going to be very negative. If it's just a one-day pop, as we had the other day, just over 20, came back again, that's just a temporary thing. Holding in the 20s is very negative. Holding in the teens is very positive. I want to make it as simple as possible. How do you go from the teens to the 20s? By market weakness, by money going back into bonds, seeing the TLT spike higher. We'll go through that. Let's go through the numbers now. So the Dow is at 13,174. What would be the support? Well, based on the 120-minute chart, there's going to be very good support at 13,057. Let's call it, on the shorter term, it's 13,120 to 13,170s, at 13,000 120 to 13,070s. Okay, I got to get used to the numbers again. And if that breaks, then it goes all the way to 13,057, which is the 9-period exponential moving average. Could even go down to the test the 13,000 level. At this particular point, I believe the consolidation should be fairly brief based on the 120-minute, at least in tomorrow afternoon or Wednesday morning. That's just the way I'm looking at it. So that's support. Let's go to the S&P. SPX.X, that's how I get the S&P. The S&P, I'm looking at the 120-minute chart. This is like, this is interesting. This is like the NYA, the New York Stock Exchange. That's NYSE. So this is D, and that's an E. So I've got a little divergence going on here between the different... did I forget something? I have to double check. I think I've forgotten. I've missed something. I know when I've missed something. 1343.98, 1341. That's A. 1343.77. Oh, it didn't do that. Oh, it just failed, but the Dow did in the 120-minute chart. All right, well, that's the way it is. B, C, and pulls back. This is D and E. And that says, okay, be careful, but the stochastics are very good and the MACD is good. So the S&P at 1397 up 6.81 would have support at 1385. On the very near term, we're talking about 1392, then 1387s, but 1385 to 1383 should be very strong support. Now we're going to go, instead of the composite index, look at what most people look at, are the Qs. Now the Qs have the C1, C2, corresponds with what I'm looking at with the others. So this also is D to E. We're in E up, so we're very close to some kind of consolidation, just short term. I'm talking about hours, 3 to 6 or 7 hours of consolidation, and it's leg C up in the weekly chart, a daily chart. I went through this earlier with during Steve's session, but I'll do it again. I'm calling the low, the doji low of on the 12th at 61.86, the start of a new move to the upside, a buy signal that goes to a buy mode. But those two parallel highs at 63.52 on the 13th of July and 63.52 on the 16th, I call that a phantom peak. I keep trying to change that color. There. I call it a gray A. In other words, it's under the previous high of 65.25, and it's just sitting there. Will it be used? We don't know. And then all of a sudden there's a spike up, and the spike up says it's E/A, but if I call that a phantom peak, it's an E/B at 63.51. Still just a tad higher than the previous high. So the question is, the MACD and stochastic didn't confirm and it pulled back, but it held the previous low, which is a 62.69 up 61.86. It made a higher low. I've got to respect that. A doji that reverses the next day to the upside. So what happened is, when the Qs, that's the NASDAQ Power Shares Trust Series, when they broke above 65.31, I'm calling this leg C. I'm being as conservative as I can. I'm saying that's a phantom peak A, B, and we're in leg C. Now, I just wanted to grab this for a moment. This is interesting. Why? Because the quicker you make peak A, B, C, Ds in the chart, especially in a weekly chart, the more likely you are to have a pullback. But it doesn't mean to say it's a serious pullback. But there is a very good chance by the middle of this week, towards the end of this week, certainly next week, we could in fact have a pullback. So I'm watching this very closely for the Qs. But if you look at the monthly chart, look at this. Holding the 9-period exponential moving average. Let me expand it, make it nice and big. Oh, should I go to the white background? No, I'm going to stay here for the moment. Look how it's holding the 9 EMA. I've got an alternate count here as well in the monthly G/B. The MACD is holding well. Stochastic is not. It's at 77%, yet the price continues higher. So it's in a buy mode. There's no buy signal, sell signal, because it hasn't gone below. The MACD has not turned negative. It hasn't closed decisively under the 9 EMA. And if it does that, it will challenge the up track in the up channel, and that support right now is at, this month it's at 63.91. So you can see that if you look at this objectively, you say, hey, no sell signals yet. There could be a right shoulder failure if it fails, but it has to do that first. Don't anticipate something. Don't anticipate an anticipation. I always say the stock market, everybody says the stock market hates uncertainty, and I say, what absolute nonsense. The stock market hates uncertainty about uncertainty, because there's always uncertainty. It's just when the ball that it's following is this diffuse action. It's up and down and up and down. That makes it very confusing. But right now, we've broken out to recovery highs. You've got to respect that. Let's go on. So now you've got gold. The GLD is right now at 0.80, up 86 cents at 156.41. Now, this is interesting, because I am still of the conviction that gold has made a significant peak F top high in the Chapman wave. We're seeing just a counter trend bounce or a counter trend rally based on the dollar pulling back. These are the three bears: VIXY, Dolly, and Bondi. Bonds, volatility index, and dollar. Just taking a bit of a breather. When the three bears need to rest, that's fine. But if you're looking at the action, you've got the stochastic powering higher in the weekly chart. You got the MACD finally last week turning up, and yet you haven't made a new recovery high. You haven't gone above 159.20. That'll be the test. If this week the GLD breaks above 159.20, that'll be very important. The gold contract at GC, I'm not going to the December, I'm going to the continuous contract, same thing. But look at the monthly chart, peak F, and from a peak F chop in the Chapman wave, you expect the longest, the deepest, and it could be a combination, pullback. Until gold itself cracks 1542, gold is at 1608. When 140, let's call it 140, 1540. If 1540 on the gold contract is taken out, that monthly, there will be such a quick decline. That's what I'm looking as a potential. But right now, I have to respect it. The chart's using up time rather than price. Remember, you've got to always distinguish. Are you looking at time? Are you looking at price? Are you looking at a combination? Now, I have cycle work that I've got here on this particular chart. I'm going to open it up so you can see. Sometimes it hits pretty much exactly. These are expansion time frames. The one that was very good was back in December of 2009 as a top. The nice bottom was made back in July of 2010. The next one was August of 2000. This is the weekly chart. August the 19th of 2011. That one was just that wasn't a time cycle one, and that gave you. It was within 3 months or three weeks of a top, significant top, and that was the top, and that top was at 1925. So now let me just go to the dollar, because I need to do the context in the euro. The dollar in the monthly has failed to climb to a left side price high of 88.71. And when is that going to be? Oh, it's the weekly chart. That'll be next week. I don't see it getting there by next week. So far the dollar's had a good rally. But I would not call it a great rally. I would just say the dollar's gone to leg D, potential peak D, a quick peak A, B, C, D, not going very far from 72.70, the low that was made back on May of 2011, to the high that was made in July of this year. So far, it's accelerated. No, it's moved up using time and some price, but nothing like the previous rallies that within 1.5 years or 2 years had gone from 70.70 to the 88 or 89, 90, 91 area. This has not done that. So maybe this is a more concerted move. Maybe it's more. The stochastics at 85%. That's good. MACD's expanding. Maybe this has legs. I don't mean leg ABC. I mean time on the upside. We'll see. But in terms of 120 top that it made and the 70.70 low, it's at 80.70. Hey, I still say that I believe that the government, the Fed maybe, still doing something to keep the dollar down, but it can't fight the rising trend. So that's why you got wheel slip, and it isn't going as high as it should, but it is going higher. Now, what am I missing? Crude oil. At CL.P had a very nice run. Okay, I can't use that. It's at CL.C. I always got to remember the different codes. Holding very nicely. Now, I thought the crude oil had the potential to go even lower, but it looks like it wants to make leg D up. And what would that do? If crude oil at 91.67 breaks above 93.25, I'm looking at the continuous contract, all of a sudden 95.49 will be the 200-period exponential moving average. I would consider that as a market positive. So, Basil, we haven't even talked about bonds. I'll talk about bonds. James Bond. Good Olympics, huh? I'll be right back. 877-927-6648. Basil Chapman, Tiger Technicians Hour. Love to take your call.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Dow's up 77, S&P's up 720, and I had a question from Lorna in the den earlier about looking at DIG, and I am so busy looking at the chart, I forgot what DIG is. Ultra Oil and Gas Pro Shares. Let me just do that now, and then I'm going to go to the bonds. But DIG is trading at 45.27. It's up 44 right now. What's really important about this is it corresponds exactly to what I was discussing with Ilka earlier in the show that I did when I joined Steve Rhodes in the 10 o'clock hour Eastern Time. I'm calling the peak that was made from the low bar. For folks in the ChapmanWave, you look for the most identifiable low bar to start your count. You have to go far back to the left, pick the most obvious low bar. That's the easy way to do it. And all you do is you set from that low bar, in this case a doji candle, on the 4th of June goes 34.07, goes to peak A, pulls back, B, pulls back, C, pulls back, doesn't undercut the initial low. Said it goes from a very sharp pullback at C to a very strong spike, D, above C, and that goes to 42.43 on the 3rd of July. Pulls back. Now, I would not have known it had started a new buy mode. I would have called this E as the next peak on the 19th, or E/potential A, and then F/potential C, when it made the high of the 30th of July. Why? Because it was holding above the MACD all the time. That said, this is still an ongoing buy mode. And the stochastic was wiggling around under and over the 80% level. To me, that's critical. So I would have had a wave count that was a little suspect. But today's high making a new high, a new recovery high above the 45.21 high of the 30th of July, says why not call it exactly the same count that I've got in the others? This is brand new leg C. In some cases, I've called it D, but I'm calling this leg C for now, which says there could be a pullback and then a rally, but it's running out of time to make a left side, right side spike to the 48.26 high of May the 1st. And remember, May the 1st was in the market pullback, so the DIG is actually, this is the ultra long side, the pro shares of the oil and gas index. So this, in fact, is moving higher in concert with the market. And that's what I was saying just earlier when I hadn't even looked at this. I said if crude oil keeps moving higher, remember what? Let's see, USO. USO might be the same thing. USO hasn't made a leg D up. It needs to cross 34.84. Today's high is 34.36. If it crosses that, and all of a sudden the 200-period exponential moving average at 35.73 of the United States Oil Fund will become a target. So now let's go back to so the question was, what was I looking at? DIG. DIG is still positive. It's taking its time making new highs, but it's making new recovery highs. It hasn't gone above the most important one of May the 5th at 48.26. I suspect from my inside wedge, ChapmanWave inside wedge technique, that because it's been failing, unless it's just a spectacular spike by Wednesday morning, it's going to fail and not get to that 48 level. Rather, it could probably stall. Let me see the 120-minute chart. So that's A, B, C, D, E. Yeah, it could stall. There's still upside energy, but it could stall somewhere around 45.80 to 46. What's the candle high there? To 46.20. That's going to be the tough thing. If it can break above that, that's very positive. Now let's go to the TLT. Now this is really important. The TLT made a peak E in the Chapman wave back on the 25th of July, 132.21. It had a really sharp, there was a Chapman wave Roman candle made on the very sharp pullback on the 27th with a low of 126.96. Now, I always say that those Roman candles, you've got to respect them, because if the price tries to rally and then comes back and goes into one half of the wick, the downside wick, there's just a really good chance not only are you going to test the low, you're going to actually break the low and then try to come back in. Well, what does it do? It tries to rally. It goes all the way to 130.69. We're looking at the TLT, the Lehman iShare 20-year Treasury Bond Fund, and it goes to 130.69 and then gaps down on Friday. Yeah, on Friday. It gaps down to 126.77, a new low, closes above it, and today it's having an inside day so far. The MACD and stochastic are very negative, which would have said to me we should have closed at the low on Friday and been lower today. So this is like that gold chart. Remember the monthly, you made that peak F top, and then you made this declining flat base triangle. In other words, it was a declining trend line to a horizontal platform. Well, that's what we're watching here. If the TLT breaks and closes under 126.30, 126.77 was the low, but if it goes under 126.30, this stock market is going higher. The VIX will still stay down in the low area. Dollar will pull back, and the euro, which I haven't even touched, will in fact go higher, and the euros and legs see up in the daily. I'll be back, 877-927-6648. Love to take your calls.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Over the weekend, I had the pleasure of going to Beckett, to the Jacob's Pillow, the dance festival that they have out in Western Mass, and saw the Royal Winnipeg Ballet in contemporary dance. It was just beautiful. It really was terrific. So, I like to give kudos where kudos are due, and that was absolutely kudoistic. It was just beautiful. They did Carmina Burana, which is they danced to the choreographed version of that, and it's actually a piece that I sang in by Carl Orff. I sang when I came to the conservatory. I was asked to sing, and I said I don't sing, but they needed a tenor. So I said I'll stand there, but it was with the Boston Symphony and Seiji Ozawa, and I was there as a tenor in Carmina Burana, recorded by RCA. So never sung since, never before, never since. I was just a very fortunate guy to do that. So it was a great piece, and it was great work to see choreographed so well. So now what I was asked about, so I'm going to just do the TLT one more time, because I did the one side, the downside, but I didn't say that 128.90 is the 9-period exponential moving average. So far in the weekly chart, it appears that it's really, at worst, it's going to make a rectangle formation with the 122s as a downside target. But at best, it can hold here while the market is finishing up this particular phase. And if there is a down move, and I'm watching some stocks in the Dow that are very important, that are actually doing okay. I'm also watching other areas that are failing miserably. They keep spiking and then they fail. And they were the great winners from previously. So we've got a diverse market here, and you've got to look at it. So above 128.90, but especially if that candle, the doji candle, gets into the wick of 130.10, the candle of the 3rd of August, I would say that the market is going to pull back a little deeper. But at this particular point, I see a rectangle trading range in the weekly, because the monthly could have a weak August or just a sideways August, but then it says there's a good chance there's another spike to leg D up in the monthly chart. So then I had a question about, it was a stock that I've followed quite closely. Was it GNC? GNC I was asked about. So GNC is GNC Holdings Nutrition Stores. I love the whole thing when I read about this in IBD. We missed it as an entry, or we might have had it, I don't remember, but we didn't do any much of it with it. In the Open My service, the opening call, that's the daily service that I have. Very, very detailed report on the markets, the different time frames that we're looking at, the short term, the near term, the intermediate term, the long term, where we are, etc., as well as our trades. And lately, my bias is still being towards shorting, even though we are trying the long side as well. The reason why I'm saying that is that I'm trying to be as stubborn as I can be. When the tide is turned in the monthly charts of some of these stocks, I want to be on the short side, because when you throw your piece of driftwood out and the tide is going out, it is not coming back to shore. It is always going out. If the tide was coming in, you threw a piece of driftwood out, it would keep coming back to shore. Follow the tide. It's really important. It can save you. So that's the way I'm looking at it. So GNC has gone to leg C in the monthly, so that is still a positive monthly chart. The weekly chart looks a little bit like the T-bonds, because it's gone into a sideways move. Now, this could make that W pattern, the DP pattern that we talk about, and that could turn into something that becomes very positive. It's like the upside down dreaded H, lowercase h in the ChapmanWave, that becomes an M pattern, soft M, lowercase m. Well, we're going to watch this closely. Now, I don't know if this person is long or short, but the candle that was formed, sorry if you're looking at my charts, got a little mixed up there. That huge candle where there must have been some earnings disappointed, that turned to a positive and then disappointment on the 26th of July, where it opens at 41.01. That is the high at 41.01. And it plunges down to 34.50. But wait a minute, everything's okay, and it closes up at 37.11. That doji candle says, if at any point, first of all, it establishes very clearly that if the price at any point goes halfway into the wick, if it goes to the 35.98 area, it's going to pull back and retest the low and probably take out the low, even if very briefly, at 34.50. But holding the 9-period moving average says you could get an inside ChapmanWave peak A, B, C, and D, very slow move to the upside, in this pattern that I call the rectangle formation, which would mean that you go to, at, or just above 41.01, the high of the 26th of July, and then you start to pull back. Now, where would you want to go long? If it's a very successful test of 37.16, the low of the second of, that was Thursday, the low of Thursday, if the price doesn't get there, it goes under the 9-period exponential moving average of 38.64 and then closes above that, I would say start a small position. You can even nibble at it now, even if the market pulls back, and I'll explain why. This pattern says there's a good chance that you've got an inside buy with a peak A and a peak B being established. Then you go to the 120-minute chart and it goes A, B, C. You've made your D. No, A, B, C, D. This is a brand new move. A. So if at any point GNC Holdings, GNC is the symbol, trading at 39.11, can close over 39.81 on the 120-minute bar, then that, again, says that the top of the candle at 41.01 is a viable upside target. So if you want to start now, have a small position and make a wider stop instead of 39.11 going to, say, 38.11. Make it almost a 2-point stop to give it a little bit of breathing room, because this is in the right sector. Now there's a C1, C2 double top that was made in the ChapmanWave back on the 5th of July, 72.70, and 72, that should be 42.70 and 42.60 on the 9th. If at any point it actually closes decisively over 41.01, there's a good chance, because it didn't take out the low of 33.71. No, it didn't. The low of the 18th of June, that it could actually make a leg D up finally, which would be a parallel wave count. So, yeah, I do like it, but I'd only start a small position because it's in this rectangle formation. It could actually trade between 34.70 and 40.75 for quite a period before it actually does anything more significant. Good. So let's get, the questions I had. I had another question. Yeah, I had a question over the weekend. The question was about the RTH, the retail index, which we did short and took a tiny little loss, 70-cent loss or something. But I think I should have raised the buy stop, because we were short at 42.61. I made the stop 1 penny above the 43.35 level, saying to myself, wait a minute, if it goes to D, that D could extend because the MACD and stochastic, the MACD and the 9-period moving average are very strong. Stochastic could play catch up. So I didn't want to play any games, because identifying tops at all-time highs is a specialty that I like, but you sometimes have to have patience, and you might have to try it a few times with very tight stops, because when it succeeds, you can get your 80 to 90 point pullback, as we did in CMG when we were fortunate enough to get that near the top. So I'm saying that this is a very interesting chart pattern. But the question was, and I think this is a great question, and I'm going to take a moment here and say, how much time do we have? We have time. Yeah, I'm going to do this. Just for 1 second, I'm going to get out of my E-minis, the charts that I showed. We've gone to leg E in the E-mini 120-minute chart. It's so fascinating that 1385, the whole high series of highs of 1385, 1387, back in late July, plummeted down to 1347, 1349, and before an eye blink on Friday, you were right back, and then you were above it. I don't know what you call a crash to the upside. We've got to find a term that gives you these 1 or 2 day crashes to the upside. It's not a rocket ship. You need one word that just says it, like blow up. Blow up means breaking down. We got to find one quick expression. It's like blowout. Yeah, blowout launch. Yes, no, not quite. Blowout launch. I'm going to think of that. I'll find it. But it's got to be a word for it, because we've been having a number of these really strong up sessions. So now, 120-minute chart says leg E. The 10-minute chart says leg D, peak D. So I'm saying it's getting a little tiresome. I said to my subscribers that we're probably going to get a doji close today, some form of a doji. But now I wanted to get out of that. I just wanted to show it to you, because I'm changing charts here. I want to go to a white background chart, because some of you said, hey, we're enjoying being able to print out some of the charts that you show. And I'm going to say, I don't mind, because that's the way you learn. It's the way I learn. I print out as many charts as I can. I sit and print out Tom's, Larry's. When I see Charles, Steve's, I love to do that. Kate and Ken and Dave White, all our analysts. We have some great analysts. I love to study them and say, okay, what's going on here? What am I learning here? So here we go. Big Ben, I was fascinated, because Big Ben is the clock itself in the den. Jay said Big Ben blast. Collusion doesn't sound good. It's got to sound like it is. Head scratcher? No, it's got to sound like it is. Okay, I finished with the S&P monthly chart, other than to say, look how it's held the 9-period exponential moving average. Look how the S&P monthly is held in the up channel. Look at it's not even close to the inside track propellant line. It's just moving higher. It was before, didn't touch it, but it was back in June. So far, I have to consider that this is a positive for the S&P. But it's the RTH that's important, because if the RTH, oops, what did I just do? Oh, I didn't want to do anything with this chart. What did I just do? Mistake. Okay. Yeah, there, market vectors. Now, how do I get it to the right size? Have I got to format it? Format symbol. 1 second. Center point, automatic, sub. There we go. Okay, we're all set. The most important thing about this, remember, this is the one that looks like a turtle. There's a difference between a tortoise and a turtle. I think a turtle has a longer neck. Anyway, it has the shell of the tortoise. This is the retail market, the market vectors retail ETF. When people ask me and they say, what's going on with the markets, lay people, I say, something's wrong with this picture. If you get retail, discretionary income, I mean, all of this retail is discretionary income. Not all of it, obviously. But a majority of it is discretionary income. In the 1930s, you didn't get the retail index for a long time, moving like there wasn't one that I know of. But it must have taken a long time for it to pick up steam because people didn't have discretionary income. But look at this. How can this be the worst of times if discretionary income is making all-time highs? Well, I haven't got it going back to 2000. It goes back to 2001. But I suspect that this is higher than it was in 2000. I'm just suspecting. Now, so the retail index is in leg D. It's bumping up against this red line. And within the red line, let's do this here. That's the red line. Let's find the most hit points of contact right there. And then let's go green, because if it breaks above it, closes above it in the monthly chart, that's very positive. Call this green. There it is. And it's saying that until the retail index starts to close underneath last month's bar, a low, 41.54, and the 9-period exponential moving average of 41.09, until the price starts to get back into that area, the trend is making higher highs and higher lows. Hey, that's in front of us. There's nothing you can say. That's what we're looking at. So if in August we start to see a failure, let's say by the 17th of August, somewhere like just after the midpoint, the retail index hasn't been able to break above this trend line, and this trend line, the green one, says if it closes decisively above it, we're going even higher. So let's call that 43.90 to 44.20. Okay? Closes above 44.20. It's at 43.22. It's a point away. Hey, it does a point in a day sometimes, so it should be able to do that. If it doesn't, Basil, what's the jagged white line on your white charts? Jagged white line, I'll check in a minute. I don't remember. I try to make them consistent in all the charts, all the time frames, so that whatever it is there. Oh, that's the 20. That's a 20-period exponential moving average. The red one or maroon one is the 50. So what we're looking at, all I have here is the 200-period exponential moving down here at 31.23. It's way above. I've got a dashed line, green line here, and this is one that I added just recently. I've been doing quite a lot of work. This is the 20. I've been doing quite a lot of work of varying this particular one, but I still keep coming back to the 20. It seems to work pretty well. And I have the 9-period exponential moving average. When these three moving averages have all crossed and they're positive, the trend has to be considered up. So all I'm saying is that if the retail index starts to falter, then what we're looking at is how does it relate? I'm going to go back to the black chart because this is very important. How does it relate to the HG.P, the at HG.P, to the continuous contract of copper? And you will see that copper made a peak D, and that's economic. That's international market strength as far as I'm concerned. 4.735, February of 2011. Pulls back to 3.0535 and is making an H formation. I'll be back with Lou and Nashua straight after this. Basil Chapman, Tiger Day Editions Hour. Dow's up 75, S&P's up 670.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and of course, by now I've done about 7 charts, so I don't remember what I was looking at. Oh, I remember high-grade copper. So high-grade copper, just to make it real simple, I'm going to go to the contract itself. I'll go to the U contract just for now. If high-grade copper is able to, it's at 3.385, 3.386. If high-grade copper breaks underneath 3.33, then look for a retest of the 3.28 area, and then the left side 3.26. Now, this is really important. If high-grade copper is making a W formation in the stochastic, this could be considered a leg A, and if in the next, by Wednesday afternoon to Thursday morning, if copper has exceeded 3.457, it shouldn't be a problem if this is really a new buy signal going to a buy mode. that will be very positive and say, okay, you've saved the day, you're in a rectangle trading formation, and that might correspond very well to the rectangle formation we're looking at in the TLT and the Dow. Let's go to Lou in New Hampshire, patiently waiting. Hi, Lou, how are you?
Good. How are you, Basil? Good
Very
morning.
well, thank you.
I'd like you to look at DUG, or the XLE.
Oh, okay. The DUG I've got at this particular point trading at 22.31. It is the ultra short oil and gas pro shares, and it's testing the left side low that was made back in May the 1st. That's when the market turned down, and this started to rally. And that was at 22.34, but the next left side low is 22.15. So that's the area that I'm watching closely. But if you don't mind, just for a second, I don't know if you heard, but did I do it at the beginning of my show? I did the DIG.
No, I wasn't listening.
Okay, so the DIG corresponds in the notation of the Chapman wave to many of the other charts, and it made a low on the 1st, just like the other charts and the indices on the 4th of June. So I'm calling this leg C. I suspect that the DIG, which is the ultra oil and gas pro shares, the long side of what you're looking at 200% short, I suspect it's going to go a little higher, and the level I'm looking at, it's at 45.28, is between 45, I'd say 45.65, maybe 45.70, and a best case of 46.20 before there's another pullback. That's the pullback that I'd be watching. So you said the XLE, and that is Energy Spider Fund, is trading at 70.83. Well, I've got, actually I looked at it this weekend because it was also corresponding to many of the charts that I'm looking at. It is now above the 200-period exponential moving average. I've got it in F/B because I can't call the low that was made right over there a high. I kind of like what's going on. Are you looking to short, in other words, to short the XLE?
That's right.
Okay, this is my recommendation. If you might miss a tiny percentage, but keep your focus on the XLE. It's at 70.82. If it starts to slide and it takes out the opening of today, if it takes out 70.50, although I'm looking for another couple of days, within 3 days or maybe 4 days, maybe by Monday of next week or Friday of this week, we might have topped out in the XLE. At this particular point, I have an alternate count that says, you know what, you've got to give the benefit of the doubt to the price, and the price is moving higher above the 9 EMA. MACD's good, stochastic's at 79%. That's okay. It's not great. So I would be hesitant to go short the XLE because it corresponds, the movement up has corresponded with the euro and corresponded with the market itself. So I would only go short if it takes out that low that I was talking about. If it takes out 70.50, today's low, I just tentatively go short, but I think I would wait. If you're asking my opinion, I'm going to wait to think about shorting the XLE. Hope that helps you. Thank you very much for calling. Folks, stay tuned for Larry Preservento. It should be a fabulous show with Larry, as always.
Are you looking